What, according to you, are the biggest challenges these banks are facing in terms of keeping their relevance and competition?
As a customer, I'm not bothered whether I'm banking with bank X or bank Y. I want similar kind of experience from all my banks, and whichever banks basically is able to give me superior experience, I'll stick with that bank. That's the customer tendency.
The urban cooperative banks almost missed out on rupees 0.7 lakh crore. So what, according to you, the credit bureau insights can be leveraged for these urban cooperative banks to not only identify but also retain these high quality borrowers before they opt out to other competition?
CIBIL can come in and partner with these banks, work with them to give them insights about their own customers.
Hello everyone, welcome to our YouTube channel. In today's podcast episode, we are going to talk about the urban cooperative banks, which are on a remarkable transformation journey, balancing between the traditionally community financing and the digitally empowered engines, being the inclusive growth for India's financial landscape. It's almost impossible to talk about the evolution of urban cooperative banks and not talk about the National Urban Cooperative Finance and Development Corporation, also known as NUCFDC, which is an NBFC and a futuristic self-regulatory organization. NUCFDC, as we all know, has been formed with the support of Ministry of Cooperation and RBI as a part of Sahkar Se Samruddhi initiative. To dive deeper conversation on this, we have our special guest today, none other than the CEO of NUCFDC, Prabhat Chaturvedi. Alongside, we also have Amol Joshi, Chief Financial Officer from TransUnion CIBIL. Thanks, Mr. Joshi and Chaturvedi, for joining this conversation. I'll straight dive into my first question to Mr. Chaturvedi. As we all know, the urban cooperative banks are a long-standing trusted institutions in India's financial landscape, especially for the small town and the lower income consumer segment. What, according to you, are the biggest challenges these banks are facing in terms of keeping their relevance and competition?
Yeah, so as you rightly said, these are long-standing institutions. Some of them are more than 100 years old, older than independent India or older than most of the institutions that we see today. And they have lived through all the challenges over the decades. But the biggest challenge that almost all banks, and which is probably pronounced more in these banks' case, is the digital transformation that is required. The way the customer is getting accustomed to consuming banking services from commercial banks or NBFCs, that kind of platform, that kind of services, probably these urban cooperative banks are not able to, that experience they are not able to give to the customer. Their system processes are a bit antiquated, bit legacy kind of systems, paper-based processes. So how do they transform themselves digitally to provide similar experience? Because as a customer, I'm not bothered whether I'm banking with bank X or bank Y. I want similar kind of experience from all my banks, and whichever banks basically is able to give me superior experience, I'll stick with that bank. That's the customer tendency. One of the challenges that these banks are experiencing is this tech-related challenges, and it is multifold because digital onboarding, digital underwriting, digital customer servicing, those are lacking in most of these institutions. Again, these are almost 1470 plus banks. So all are not alike. They are geographically, linguistically quite diverse. So some are quite evolved institutions, large ones, but I'm talking of the average medium-sized banks in this ecosystem. They are not able to provide that kind of digital experience to their customer. As a result, people who were banking with these banks, their next generation, their kids, who probably availed education loan from some of these banks, are not banking with these banks because that digital experience is lacking. And that is one. Second is the talent crunch, which is visible in all segments right now, because you have Indian corporates growing, they need talent. Then you have global capability centers being built in India for US and Europe and other countries. So a lot of talent is getting utilized in these resources. As a result, organizations who are not very good paymaster, who can't pay above average in market, they are basically fighting for talent, which is true for these urban cooperative banks also. So talent crunch, and that gets pronounced in more specific areas like IT or at CXO level. So almost all the banks we meet, they every third bank is looking for a good CEO, but they are not able to find one. So this talent crunch is also becoming pronounced in urban cooperative banks. Third is the entire concern about compliance and governance issues, the kind of things that have happened with few banks, and the overall compliance posture of these banks can improve. And that is what regulator is also telling these banks, that you need to upgrade yourself on compliance and governance aspects. And fourth, I'll say the capital that is required to grow any business. Because of the structure they are dependent on their members to contribute capital. And if they see a growth opportunity and they require capital to grow, that growth capital has to come from these members only, and it is limited by their ability to contribute. So recently RBI has come out with the discussion paper on increasing avenues for raising capital for these urban cooperative banks. We have also responded to that. And probably if it is a discussion paper right now, it will take almost like 1.5 to 2 years to get formulated into a policy guideline that will help these banks in raising capital. As an umbrella organization, we also have been given this mandate by RBI to augment their capital adequacy ratio. We can contribute through debt instruments, tier 2 capital, NCDs, but for equity capital, we are waiting for these final guidelines from RBI. So internally, we summarize this with T2 C2 abbreviation, which is talent and tech, compliance and capital. This is the one of the challenges that these banks are facing.
Sure, I think that's a brilliant perspective, and thanks for sharing such a bigger picture with such clarity. Thanks. And building on the same, my next question to Mr. Joshi, and it's certainly a very pleasure to talk about the first and the recent Sahkar trend, the research report by TransUnion CIBIL in association with NUCFDC. As per the report, the urban cooperative banks almost missed out on rupees 0.7 lakh crore worth loan to their own customers as they opted out other lenders. So what, according to you, the credit bureau insights can be leveraged for these urban cooperative banks to not only identify but also retain these high quality borrowers before they opt out to other competition?
Right. Firstly, thank you so much for having me on the podcast, and Chaturvedi ji, thank you for such a detailed insight on the challenges that we face. I think we picked up the right point in terms of T2, T2 C2 thing. I think that was appropriate. One of the piece that we can love to partner you with is on the second T, which is on the technology part. Because with CIBIL, we have been working with you, your organization, with most of the banks that are there in the country. And especially in the cooperative sector. The urban cooperative banks are at a size and scale from which they can leapfrog into being larger organizations, and the opportunity is right there in front of us. And the question that Shefali just asked is a classic question of a missed opportunity, which is where someone like a CIBIL can come in and partner with these banks, work with them to give them insights about their own customers, because there's a strong relationship that these banks build with their customers, but allowing them to go and meet their borrowing needs from someone outside is an unfair situation for the cooperative banks. What CIBIL can do is that through their sort of reports that are available, and a lot of banks actually use them, look at their own portfolio, look at their existing to bank ETB, as we call them, existing to bank customers, and looking at our CV, your CMR score, look at the trends that are coming out of that customer, and then help the banks tap into that pool and allow such kind of missed opportunity, to be extinguished and be within the own urban cooperative banks sector only.
Great, thanks Mr. Joshi, can't agree more. This is certainly a very sharp and very insightful perspective. Thanks for that. And moving on, my next question to Mr. Chaturvedi. I would say we all have grown up, with the environment of cooperative banks around us. Like I do remember my parents had been banking with most of the cooperative banks. And that's a nostalgia for me to continue with this conversation is what I can say. Since then I've seen that these urban cooperative banks definitely have this personal touch and the ethos of customer connect. How do you define that? How are they managing this with the current overall digitization and the overall pressure of modernization? They are still, it's amazing to see that they're still continuing the same ethos and same personal touch. Can you help us understand how are they managing this?
So this is important because if you, for example, any organization has to do their own SWOT analysis, strength, weakness, opportunity, threat. So this is one of their biggest strength. See, you and me, we are all customers of commercial banks, but almost all, I'll not say all, but almost all commercial bank customers don't feel the kind of affinity that a urban cooperative bank customer feels with their banks, because they are one of the co-owners, they are one of the members. With commercial banks, even if you buy share and you technically become a co-owner, you don't feel that association. Somehow these banks have been able to cultivate that kind of relationship with their customer, and all ups and downs that we have seen in past decades, most of that trust remains, and that is something that these banks hold dear for something that they need to protect. What should happen, in my view, another aspect of customer care, for example, all of us are tired of calling customer care numbers and then press this button, press that button, wait for this, go back to menu. Nobody likes that experience. So in urban cooperative banks, fortunately, they have conserved that age-old customer care which is personalized. So in my view, now when they digitize, they need to retain that personal touch, that personalized service aspect, and use technology in the way it is useful for the customer. One example of that can be that AI is very good, large language models are very good in translating, in speaking to the customer in its language, his or her language. So if you can build solutions which are interactive with customer, which respond, even if you are using technology, either use manpower for responding to customer queries, even if you are using technology, it should be able to converse with the customer in customer's language. So basis his location or the way he starts conversation, this system should be able to speak to the customer in the language they understand. Simple queries. Small things like that, even all the customer communications, whether it is written or somebody is calling the customer, it should be in customer's language, because these banks are hyper local. They are basically a part of the local community, local economy. So even when they digitize, if they can retain these elements of personalized service, personalized customer. I remember when I was working with a commercial bank, we did a pilot with Intel, where we said that Intel's chip will be there in our debit card, and when the customer walks in, the sensor will be able to read that Mr. So-and-so is walking in and give an alert on his relationship manager's portal that your important customer is walking in. This is given only to select ultra HNI kind of customers. And it will also give a pop-up of what is the relationship size, what can be a possible reason why he is walking in today. His FD is maturing, his locker agreement is up for renewal, what can be a possible reason. So now this fellow, the relationship manager goes to the customer with a warm hello with his name and with say, sir, probably you are coming for this, we'll get this done, please have a coffee. This compared to the old age banking, or even today if you walk into a bank branch, the experience that you have, I need not narrate, you've all gone through. Right. So if they can retain, even with using technology, you can be hyper personal, you can be hyper relevant for the customer, for the community, for the local economy. That is the flavor that they need to retain. That's my view.
I think that's a bang-on response and a very thoughtful. Thanks for that comprehensive response. That hyper-localization definitely matters a lot, and that's what a customer connect, I think, breeds more. Shifting gears a little bit more, my next question to Mr. Joshi. Going back to the Sarkar Trend Report, it also shows that the urban cooperative banks have a lower conversion rate when we talk about the commercial loans compared to the PSUs. So my question is that can there be a data-driven underwriting or a tool like Credit Vision CIBIL Commercial Rank help these urban cooperative banks improve the conversion rates?
Sure, and that's a sure short answer in terms of resounding yes, Shefali. If you look at the statistics, only 23% of those loans given by the UCBs get converted into loans to their customers. The benchmark, if I just use PSU banks as a benchmark for it, it's 30% there. So clearly we are losing customers, for them. And what can happen is that their whole, and Mr. Chaturvedi did, mention about the relationship part of it. They really know their customer. But what is the formal means of ensuring that they know the next need of the customer? Which is where an organization like a CIBIL can come in. We have a portfolio monitoring mechanism to do. So run it on your portfolio and you get to know how the portfolio is behaving. We have something like an inquiry triggers. Is any of your customers going outside of you as a bank and looking for loans outside? That can be a clear indicator of reaching out to a customer proactively and doing it. So while the banking needs are being met by these urban cooperative banks, which is like complete grassroots, penetration is there. What gets missed out is the formal way of ensuring that they're able to read the next needs of the customer, proactive approach towards reaching out, and obviously from a risk-taking perspective, the CIBIL framework, which is a completely formal way of assessing the customer's creditworthiness, comes into the picture. And you sort of complement that with a portfolio management tool or an inquiry trigger, then you are matching both a great business relationship, proactive approach, and finally being able to meet the customer's credit needs within your own credit policy details. So that's a winning combination is how I feel.
Thanks, Mr. Joshi. That's a great perspective, and thanks for bringing that up. That really adds a lot of value to this conversation. My next question to Mr. Chaturvedi. Basis the report, there are a lot of initiatives that NUCFDC is also doing, like Sahkar Credit Engine and Sahkar Pathshala. Can you please elaborate how are these benefiting the urban cooperative banks?
Yeah, so in a way, if I take example of creating the infrastructure and then using it is similar to creating a road and then launching new vehicles that can run on road. So right now we are in the phase of building the road, which is the basic infrastructure that is required, the cloud, the core banking applications that are required to run different applications. This is something which we are building right now, but parallelly, and we have a picture of a steady state architecture on how it will look like. Bits and pieces of that we are putting in place. For example, we have already launched a few applications on compliance. One which basically automates the entire RBI reporting. It takes data from bank's core banking system, populates in the required fields for reporting to RBI. It can integrate with the Daksh portal of the RBI and the core banking system of the bank, and the entire reporting can be automated. We have also launched one application which is basically for risk-based internal audit of these banks. So the internal audit, concurrent audit, information security audit, all of this can be automated for the auditor also, and a dashboard for the management also. Sahkar Pathshala you mentioned, that's our training, learning and development or capacity building initiative, which has basically broadly two parts. One is the classroom training, in-person training, and the other is we are creating a learning management system, LMS software, across hierarchy from fresher to CXO to board of directors to different departments, sales, credit, operations, all these treasury, different departments. Anybody having any training need should be able to access this software anytime, anywhere, and go through these engaging audio-visual training capsules followed by a test which gives him a certificate and a proficiency level. So for the bank also, you have how many bank's employees are trained, at what proficiency level they are, and for the industry also you can showcase that these many banks have participated and this is the proficiency level of the employees. So we are partnering with a lot of organizations for this content and then converting this into a consumable form, simple language translated into multiple languages for the bank's employees to consume. That's the training initiative. We are also in advanced stages of basically launching a loan origination system, which is required for digital lending. We are also working on how to onboard customer digitally for the liabilities also, not only loans. So if somebody comes in for a savings account or an FD, can the bank onboard that customer digitally onto their network? Different things on cyber security. We are in process right now for a security operations center, creating a SOC. We are also negotiating cyber insurance for these banks and for their customers. Retail cyber insurance for individual customers like you and me, because we carry our mobile phones and we are also prone to such cyber frauds or all kind of things that are happening right now. How can individual customers as well as the bank can be protected from these cyber attacks? Those kind of solutions we are trying to build. In summary, the way I narrated in the beginning, that entire journey of the customer should be digital, and customer should be able to avail all the services offered by banks at comfort of his home, is not available today in urban cooperative banks. How to make it available and whatever is required to basically enable the banks to offer this is our domain. So in our license, in our COR, RBI has defined that you will do some fund-based activities, some non-fund-based activities, and in that they have mentioned that we have to set up a centralized IT infrastructure for the banks so that it is cost-effective for all the banks, because individual banks building all of this on their own with all the cyber security required, it will not be possible for most of these small to mid-sized banks to build it. So we will do it centrally and will be cost-effective for the banks. That is the mandate of the organization.
I think that's a very deeper insight, and thanks for sharing not just your expertise but also your heart. And taking this conversation a step further, my next question to Mr. Joshi, I'm again going back to the Sarkar Trend Report. Basis that report, the urban cooperative banks have a higher share of low-risk borrowers, especially for the commercial lending. Now, what does this indicate in terms of the potential of urban cooperative banks, and can TransUnion CIBIL help in this growing this potential for urban cooperative banks?
Yeah. So you picked a very pertinent point. What typically happens because of the high-touch banking that the urban cooperatives bank do, so they know the customer really well, and there's always this certain credit policy overhang that is there in any lending book. Typically, the customer who is closest, has a lowest risk, is offered the loan because the formal embedment of the CIBIL score into the credit policy is the missing link. And a lot of times we have seen that moment the banks start using a formal credit appraisal mechanism, which is a third party rated tool, which is like a CIBIL score from a consumer perspective, or the CMR rank that we have for our small and MSME businesses. It immediately gives a kicker to the credit policy, because what you have is a clear relationship coming in together. The banks are fundamentally very strong, and what Mr. Chaturvedi said, that they are only getting stronger because their customer base is expanding. They are able to meet the customers' end-to-end needs, the family banking, the business banking, and then the business expansion needs. What would have been something which is going out of the urban cooperative bank network can be, used by us to get it. When I say us, it's the NUCFDC, to get in a pool, get the tech part sorted out, allow them to work effectively with APIs that CIBIL provides, allow CIBIL to work with them to embed their credit policy requirements into the scoring mechanism that we have, and then we have a winning combination which allows them to take the measure of risks that they are comfortable with. It doesn't have to be low, medium or high. It is about that particular bank and its risk appetite, embedded with a policy assessment, embedded with a CIBIL score, which allows the right lending decision to be made by them to not only continue maintaining that strong relationship, but also allow them to get the fair returns that they are due.
Great, Mr. Joshi. That's a very sharp perspective. Thanks for bringing that up. And moving on to my next question to Mr. Chaturvedi. While looking ahead, what according to you the urban cooperative banks should take up the next strategic step to keep the tandem with the fast growing credit market in India?
Yeah, so this fast-growing market is mostly digital. All banks, NBFCs who are offering these loan products are able to execute the entire customer approaching to loan disbursement transaction within very few minutes or hours or days, depending on what the product is, unsecured or secured. Most of these banks do not have those kind of offerings. So they need to build digital journeys for the home loan customer, for the auto loan customer, for the vehicle loan, gold loan customers, or the MSME business loan customers. That's MSME business loan particularly is one big opportunity where the credit gap is anywhere close to 20-25 lakh crore, depending on various government estimates. We heard our finance minister saying few days back that NBFCs need to double their AUM from 25 lakh crore to almost 47 lakh crores. That is the kind of credit demand that is there, but banks and NBFCs put together are not able to meet it. This set of banks, being very old institutions, are perfectly entrenched to take advantage of this. But if you look at SECA Trends report, for example, it clearly shows that their turnaround times are high. Probably those digital journeys are not there. Their approval rates are also not up to the mark. So probably if they launch digital products, they reduce the turnaround times, they give out loan faster. The journeys are superior compared to what the customers are experiencing right now. They have the they can be one of the important contributors to this financial space. While we have new NBFCs coming in, new set of banks, whether it is small finance bank or payment banks being set up, these are the old institutions. If they digitalize themselves, they reduce their time taken for customer, they can be one of the biggest components of this financial ecosystem. Few decades back, probably around 15-20 years back, they were around 7-8% of the entire credit, which has now come down to less than 3%, because the other segments have grown faster. They are also growing on their own. But the other segments, which are commercial banks or NBFCs, have seen much faster growth. Why they are not able to grow at that pace? Because they have not embraced technology the way they should. So probably the need right now is to not resist change, but digitize themselves completely, and we are there to help them and offer these kind of products in the way customer is being accustomed to consuming. If they are able to do that, probably growth is not an issue. The kind of growth we are going to see as a country in coming 25 years, the way India is growing, and we are all gunning for Amrit Kal 2047 when we complete 100 years as a country. The kind of growth that we have seen in last, say, 10 years is nothing compared to what is coming ahead. But only the players who are ready, who have the right product, will be able to compete and win that market. My favorite saying is, those who sweat more in peace bleed less in war. So for this war for credit, they have to sweat in peace today, become digitally ready, then only they'll be able to compete. I don't see any other way they can win.
Thanks for sharing that true perspective, or the true lens for the urban cooperative banks. I would say, truly agree with you that the survival for the fittest is the only funda that can be followed. And moving on to my last question to Mr. Joshi, I'll go back to again the SECA Trends report. And as per the report, it also emphasizes more on the early warning system and the real-time portfolio management for urban cooperative banks. Help us understand how can a credit bureau data can be leveraged to improve the delinquencies and improve the asset quality for these banks?
Sure, I think that's a very important question. Mr. Chaturvedi ji really emphasized on the need to digitize the whole urban cooperative banks, the speed to market, turnaround time. In all this, when he says into leading the urban cooperative banks to grow their business, at all points of time, at the back of his mind is the credit part, which is the risk part that is being there. Now, there are a few ways that they have been working, which is leading to sort of them losing market share, and 7% going down to 3% is quite a steep drop in terms of the market share that they have. What happens is that as they advance on the technology front, reduce their TATs, ensure that they are out there in the market, at the back end, the credit policy has to match in terms of their ability to take risk, has to match with their ability to do business with their customers. So something like a CIBIL can actually come in and help them to alert them about a change in an abnormal or a change in the customer's behavior, any abnormality that they see in the banking trends that the customer has. Is he missing payments outside of that particular bank that in question, which leads to a stress going to hit the bank soon enough. So CIBIL has a few products which allows you to do sort of an early warning trigger on such kind of behavior. What happens there is that the banks can then manage their risk profiles well. They can tap the customer in time to ensure that their money is returned in advance. And the third thing is, with such insight that CIBIL can provide in terms of early warning about the customer's behavior, allows them to proactively manage that risk, which otherwise can lead to some mishaps, serious mishaps happening on their loan portfolio. So overall, what I just wanted to ensure that we are able to share with NUCFDC is that with this great partnership, we are looking forward to ensure that CIBIL is able to partner with you. Your reach with the urban cooperative banks is unparalleled. We are out here to ensure that as they take the next step in building and growing their business, CIBIL is there in every step to help them manage the risk pretty well.
I want to add to that we are already in touch with the CIBIL Saksham team on, as I said, the framework that we want to create. We will need different partners. So, for example, CIBIL is focused on credit underwriting and how to underwrite customer better, how to read bureau reports better. That is one training area for which we are already in touch. We are also in touch with similar partners for other training areas. In addition to digitization and better underwriting, like you said, these banks also need to change their human practices, human capital management practices. What should be their KRA, KPIs for the staff? How should they incentivize this set of people? They also will need what we call in banking assisted model. So as you are digitizing, your customer also has a learning curve. They may not be digitally savvy because some of these are senior citizens or old age customers. So your employees should be trained how to handhold these customers and assist them in this digital journey. So all these changes, and above all, the compliance governance standards across urban cooperative bank has to go up. That is where you win the regulator's trust. So the kind of issues that have happened in past, how we can address them, how we can increase the compliance governance levels of these banks, and that's also another important area for banks to ponder over.
Sure.
I think that's a great ground perspective is what we can say, and thanks Mr. Joshi for highlighting that, what are the key important improvements that can be possible and which can bring a lot of change. And that brings us to the end of today's episode. To summarize today's podcast, while the urban cooperative banks are on the crossroads of balancing between the tradition and transformation, with the right set of support of data insights, digitization, and strategic partnership, they can retain their relevance and ride for the financial growth. Thank you all for joining us. That was our CIBIL Sandesh.